Hi guys, welcome to another update video on ADA. I'm tracking here the Elliott Wave structure for ADA on the 1 hour time frame. This is the model that we use to identify relevant support and resistance levels. That's the model that we use to identify structure on the chart, where usually most people only see chaos, and obviously it's only a framework and it's based on probabilities, so there are never guarantees. But it can help us to reduce the uncertainty, right? You will never get certainty in markets, but we can reduce uncertainty. So what we, for example, use it for at the moment here on the ADA chart is to identify a support zone and to identify the downside structure and to identify the key levels that now need to be broken to the upside for an indication that a low has formed. For the last few weeks, I've been tracking lower prices on the ADA chart, and there has not been any evidence really that a low has formed. The last bounce on the 4th of November, after that sell-off, that last bounce ended as a 3-wave move up. And I told you that this entire structure looks better with one more low. I can easily track it as an A, B, C structure, and the C wave was an ending diagonal pattern with a very large fourth wave, but in an ending diagonal pattern that can happen. I could for sure also track it as a WXY structure, where the Y wave is an A, B, C. There are reasons why I rather track it like this, but either way, in none of these scenarios we have a confirmed low yet. And so this 1-2 setup that I'm tracking is still technically valid, but the risk is high it will be invalidated because it doesn't take much to get the price below the 10th of October low. In yesterday's video, I also explained to you guys the larger time frame, so feel free to check it out. But what is very important is I explained yesterday. That the because of the poor data quality, especially the sell-off on the 10th of October, definitely damaged the data quality. Because of the poor data quality, the overall structure on the chart is apologies, is very, very, I would say, messy, right? It's rather unclear, because is this really the right Fibonacci area? Is this really the swing low, and is really the 42-cent level the invalidation point? I don't necessarily believe that, because on some exchanges, this low on the 10th of October was a bit deeper, it was a bit lower. So that's why I said from the, after the 10th of October flash crash happened, be on the side of caution here. Be aware, guys, that this could not be the right, these could not be the right parameters, for example. So it can be helpful to wait for a first micro 5-wave move that would indicate the trend direction, like 5 waves up would tell us a low has likely formed, because the 5-wave move is an indication where the trend is going, right? So it can make sense to wait for that, because this would then give us a decent swing low, a significant swing low that we can base our analysis on, right? And risk management on. Because where do you set the stop now? If you are trading this on the long side from a structural point of view, well, where would you set your stop? You can't put it anywhere. If you put it here below that 10th of October low, that will be different for each exchange. That's crazy. So if you're long, yeah, it's not easy. So that's why I said I'm not gonna call a low here just because the wave count is full, because it could easily extend lower. We just have to deal with this situation. We had to wait after the 10th of October for some structure to emerge, and then for this correction to finish, to be able to measure price targets to the upside. But at the moment, we're still trending down. So as I said before, we would need minimally a break above the wave 4 high here around 60.7 cents for an indication that a low is in. I really don't have any other key level. I mean, for sure, once we break above this internal B wave high, maybe around 57 cents, that's an early indication that we might have bottomed. But clearly, we're still printing lower lows, lower highs. Already a break above the Monday high would help as an early signal. That's at basically 50 cents, because at least then we have a chance to get back into a series of higher highs and higher lows. Next micro support is around 44.6 cents, and then we have a larger degree support level at 43.7 cents. That's here from the larger Fib box on the chart that affects or is affected by the larger time frame, the larger degree, and then 32.2 cents, but that is just really the larger time frame. I don't have any high confidence bullish setup here. This would get interesting if we get a micro 5-wave move up now that breaks above this 11th of or 10th of November high, then a corrective 3-wave pullback, which could set the stage for higher prices. This is basically what we need for a more reliable upside, trend reversal signal to the upside. So yeah, that's just a quick update on ADA. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, then I recommend you also check out our X channel. I leave a link in the comment section. And also feel free to join our membership. You can find on our channel page all the information about it. There are member-only videos, live stream recordings. You get access to our member live streams every Sunday. And as a gold member, you also access our Discord server for a lot of additional updates. You also get access to all these TradingView live charts and much more. Thanks so much. Bye-bye.